Good morning. Welcome to another 55 minutes of current and relevant conversations, business conversation that is, and it's happening here on Business Morning on Channels Television. I'm Imi John Mekwa. Let's get into it now. Oil prices retreated on Thursday after rising for 2 sessions, with investors still showing lingering concern over possible U.S. recession and weaker oil demand. Brent crude fell 32 cents to $87.01 a barrel, while U.S. West Texas Intermediate crude also went down 22 cents to $83.04. Both benchmarks rose 2% on Wednesday to their highest in more than a month, as cooling U.S. inflation data spurred hopes that the Federal Reserve is likely to stop hiking interest rates. Previous tightening, however, which has lifted interest rates to their highest since 2007, raised concerns that the Fed's focus on halting inflation might throttle economic growth and future oil demand in the world's biggest oil user. The U.S. Consumer Price Index climbed 0.1% last month, and that's below economists' expectations for a 0.2% gain and down from a 0.4% increase in February, raising expectations that the Fed is likely to stop hiking rates after a possible increase in May. Still in the global space, Malaysian palm oil futures fell for a second session, weighed by softer rival oils and a firmer ringgit. The benchmark palm oil contract for June delivery on the Bursa Malaysia Derivatives Exchange dropped 1.62% to 3,714 ringgit. That's about $843 a ton by midday. On Wednesday, it fell 2.91%. Soy oil prices on the Chicago Board of Trade was down 0.44%. Dalian's most active soy contract fell also 0.73%, while its palm oil contract was also down 2.49%. Meanwhile, oil prices retreated on Thursday, with investors, of course, still showing concern about a possible U.S. recession. We move to the commodities space now and looking at what's happening with wheat. Chicago soybean futures climbed to a 1-week high on Thursday, while corn gained for a second session with a further reduction in Argentina's crop outlook underpinning prices. Wheat slid, giving up some of the last session's gains, although the losses were limited by Russia's criticism of a deal allowing Ukraine grain exports. Argentina's crop growing areas continue to be dry, which is reducing yields, and that's according to traders' observations. Corn added 0.1% to $6.56 for a 3/4 of a bushel, while wheat lost 0.5% to $6.76 a bushel. Let's come home to Nigeria now. Some infrastructure may receive facelifts going by the proposal of the Minister of Works, that's Mr. Babatunde Fashola, that 6.2 billion naira be used for rehabilitation of the 3rd mainland bridge and others, including installation of scanners for Abuja and Kaduna rail stations. Well, this was at the Federal Executive Council meeting, which was held yesterday.
The Vice President, Professor Yemi Osinbajo, chairs the Federal Executive Council meeting on behalf of President Muhammadu Buhari, who is in Saudi Arabia on an 8-day official trip. Approvals to advance the security of the nation's transport infrastructure were among critical considerations. At a briefing, the Minister of Works and Housing announced a 6.2 billion naira fresh contract for the maintenance of the 3rd mainland bridge in Lagos.
This contract responds to the potholes that have become manifest on the entire pavement of the deck of the bridge, spanning 11 kilometers, and the interchanges, Adeniji Adele, Adekunle, and Bagada ramps that all link the bridge. This is for the resurfacing of all of that.
The lack of proper monitoring to forestall the persistent theft of infrastructural components on the bridges is one challenge the minister insists can be resolved.
It's one of my proposals today for consideration and recommendation to the next government is to move the Federal Road Safety Corps away from the SGF and let it become a parastatal supervised by the Ministry of Works, whoever that may be, so that there is a proper alignment of responsibility, because if you build the road, somebody has statutory responsibility to secure it. That person better report to the main organ instead of through a third and remote organization.
Another 495 million naira approved by the council is targeted at advancing the security of some of the nation's railway facilities.
We are starting the railway revolution. We are trying to put in place a lot of things in the railway. We don't want people to come and damage all that government has been trying to put in place in that sector. And so today there was a memo before council for the provision of baggage scanners at railway stations, and scanners cost 495 million naira.
A total of 42.3 billion naira is approved by the Federal Executive Council for the Ministries of Finance, Transportation, as well as Works and Housing. From the Presidential Villa, Gloria Umezuke, Channels Television News.
All right, from that, we'll hope that the third mainland bridge will not be shut down anytime soon, even though we did see that one day, I think that was 2 Sundays ago. But now let's move to other current issues. And one of that is that the Securities and Exchange Commission had its first Capital Market Committee meeting, CMC, for this year. They had it yesterday. The major topic on that at that meeting was the revised Capital Market Master Plan implementation. Well, the SEC had previously implemented the initiatives of the 10-year capital market plan, which were designed to reposition the Nigerian capital market as an attractive investment destination and a critical facilitator of capital formation for the acceleration and growth as well as development of the Nigerian economy. How is this revised version different from what has been on before now? We have Dr. Okeo Meano. He is the Chief Economist for the Securities and Exchange Commission, joining us virtually from Accra. Dr. Meano, good morning. Thank you for your time this morning.
Good morning, Nini. Thank you for having me once again.
Good to have you. So what's the difference? You've been talking a whole lot, even before the meeting yesterday, about the revised master plan. What's the difference?
Yeah, thank you. The revised master plan updates the capital market master plan. It brings it to focus on the current issues that we have. You know, the other master plan was designed or was put in place in 2015, and it's a dynamic market. Between that time and now, a lot has changed. We've introduced new products, market conditions have changed, so it was important for us to update this plan to make it relevant for today. So it's a lot of the things there are still, retained, but, modified in a way that they become more relevant and they help us to achieve our objectives.
So what are those? So what exactly are those things that have been revised and updated? We know that technology, obviously ICT, is a major current strategy that has to be imbibed in everything. So tell us, what are those new things, that you've added or updated?
Yeah, as you rightly said, we included efforts we are making in the fintech space. We believe that fintech is a new frontier for our market. We are worried about the graying demography we have in the market, and we believe that fintech will be a gateway to bring a younger demography into the market. So yes, the revised master plan talks about how we will incubate. Because of it, we now have a regulatory incubator that we have set up. And the system would allow new companies, fintechs, most likely, new startups to be able to enter the market and, make it more efficient. So that's one of the things. Another focus of the new master plan is the commodities end of the market, commodities segment. We all know that Nigeria does a lot in that. We depend on crude oil. We've got some gold. We do a lot of agriculture. So it's important that we build a commodities market that will service these parts of our economy. It's not right that we have an economy that is based on commodities, yet we do not have a good market for those commodities. We have to have a way to do price discovery for our farmers. We have to have a way to provide financing for our miners and all that. And it's also important that we have standards for the products that we make. So this whole package is what we are doing in the commodities ecosystem. Another area of focus is the non-interest capital markets. We have a large pool of capital around the world and in the country. A lot of investors are interested in non-interest and ethical products. So we have created a whole section of that revised capital market master plan to focus on making these products available, making these opportunities available for everyone. We also have securitization, we have derivatives. So everything we have there is focused at making our market bigger, better, more responsive to the needs of investors and issuers alike. And all geared towards building a bigger economy for everyone.
Yeah, but reports show that in recent times, even the capital markets seems to be losing its foreign investors. So we have more of domestic investors. Is that a good thing?
Amy, I would say it's not. It's not. Every market wants to attract foreign capital. So we also want to attract foreign capital. We're not happy that in the past 2 years, there's been a reduction in foreign participation in the market, but we know the reasons. I mean, the general economic reasons, issues around forex and all that. But we think that our market is attractive. We have a 200 million strong population. It's a big market. It's a dynamic market. We think is attractive, and we can only make it better. That's why we are doing all this work we are doing to attract everyone, both domestic and foreign. But I must tell you that we really didn't feel the impact of the exit of foreign investors, because the size of the domestic part of the market grew. But I sometimes wonder what it would have been if the foreign part of the market was here and the domestic increased the way it increased. We would have had a bigger market by now, and that's our aim, that's our target. We, in addition to all the things we are doing to make the market better, we've also been doing some advocacy, some advertising, I would say. Just last month, I was in Johannesburg to speak with a few investors, many of whom left or who have reduced their investments here. And we are being transparent. We are telling them the truth about what is going on, and we are telling them what we are doing to make the market better for them. So we're interested in getting foreign investors to come back into our market. I'd even bring more capital than they had in here before.
Okay, then the other thing is it's good that we see domestic investors, and it's good you mentioned the issue of the youth and technology, but it still seems a bit secluded, as in not including the youth, the Gen Zs, who would really like to, you want to get into the capital market, it's on your phone, you just get in there and you still have to do a lot of paperwork, a lot of signing and sending and waiting for that. And what are you doing to remove that cumbersome process? Because I believe that will attract, the youth are very impatient these days.
Oh, okay. Thank you, Ini. We're doing a lot in that regard. Yes, I'm a champion for ease of entry into the market, and we've challenged our funds, our mutual funds, and asked why is it not possible for if people can register in betting sites and on such sites very easily. Why can't people buy funds that way? Okay, but like I said before, remember, I said that we are now opening a gateway for the fintechs. Because when the fintechs come, they come in with a lot of innovation. We just registered 5 of them recently, and we're encouraging more to come in. They come in with innovation. They make it easier for people to access the market. Apart from encouraging technology, we're also doing a lot more in getting our youth to come into the market. One of the things we are doing is also to introduce capital market studies into the curricula of the secondary and tertiary institutions in Nigeria. We've gone very far with that project. We're working with NERDC on that, and we believe that very soon we have that, because we believe that when people begin to know the opportunities, know about the market from a young age, when they haven't even started any money, when they do start any money, they would remember to invest in the market, because our market creates opportunities, our market creates wealth. People who have invested in our market in the past 5-10 years have really done quite well. So we are pursuing it from all these angles, and I promise that we will continue to do so. We will continue to take out these bottlenecks, these cumbersome forms, and all these things that make it difficult for people to to invest in our market and to play in our market.
All right, thank you so much, Dr. Oke Omeano, Chief Economist, Securities and Exchange Commission. And I think you're concluding your meetings today, so we wish you the best in your meetings.
Thank you, Ini.
All right, we can still continue along that line, talking about commodities and, of course, the market. And joining us for that conversation is economist with Financial Derivatives Company, Mr. Clem Igbanugo, joins us in the studio. Mr. Igbanugo, good morning. Good to have you a second time this week. And we're just talking about the markets there. I know we have a segment for the markets on Business Morning, but, I mean, FDC also delves into the market, and we've been seeing some red numbers. You know, even though yesterday I think it was flat, yeah. It closed flat. Yeah. And Dr. Omeide was just talking about getting the foreign investors back. Do you see that as, is it something we can achieve in this present time, or we have to be more patient and just maximize the domestic investors' strength first?
Yes, yes, of course. You know, basically you discover a trend since January, February, March. After election, it does appear that it's even getting worse. And it's because there's a whole lot of uncertainties in that ecosystem.
Yeah, we thought the uncertainty would go away with the election.
The contention is still there. So you look at what happened to Airtel Nigeria last week, almost 500 billion.
Even 2 days ago, it was down for 3 consecutive trading sessions.
The sell-off is because of the fear. The foreign investors don't know what will happen next, because there's a whole lot of cloud there. What's the Supreme Court going to say? Will there be a judicial miscarriage? Will people say, oh, we don't agree with this judgment? Will there be protest? Will there be peace? And stuff like that. So that fear, because for you to attract foreign investors, look at what happened to capital importation, down more than 20% year on year. And for fourth quarter, more than 50%.
Almost 50%.
Of course, because that apprehension, so there is tentativeness. You are just seeing the capital importation just showed us what came in, but it didn't show us what went out. Because the capital flight is now very much more than anybody could have expected that would happen at this time. So we really need to rebuild confidence in the market. And I hope that the institutions that are in charge of the electoral issues will be able to do justice to this, so that we carve names and ensure that we recover.
Yeah, imagine the connection from politics to the economy to investors, and this will all obviously feed into things like investment, employment, GDP,
even
inflation,
your exchange rate,
FX.
Of course, you know, recently we've been studying some numbers in Africa and patterns in Africa, and we discovered that Nigeria had plunged in its rating in state legitimacy, meaning Nigerians, citizens, are not accepting the government as representing them. That is there. And we try to query why. We saw, because of poor performance of the economy, per capita income is low, and then poor rating on election performance. And what we've seen in Africa is that countries that have this trend tend to tilt towards a high level of fragility, crisis here and there. And that's where we don't want to get to. So, and when you have that economic instability, macroeconomic instability, when investors are not bringing in funds, where do you get the FX from? And that's crisis for your exchange rate, right? Already we have a debt problem, and we don't know what the next rating will be. Look at what happened in Ghana in 2021, December 2021, when their rating went so bad, investors began to take off their fund and their currency plunged. And so I think there's so much challenge at this time. But of course, they said it is during the time of war that heroes are made. So I believe that the government is repositioning to tackle those issues.
But I mean, US seems to be having it good, because yesterday their inflation was out and it's down
5%.
I mean,
yeah.
And it's even beyond what analysts was expecting.
Analysts were expecting 5.1, 5.2.
I mean, what did they do?
But don't forget that March, energy prices went so low. Okay. So you see in that index, year on year, energy inflation was declined by 6%, 6.4%. Year on year, month to month by 3.4%. And so core inflation is still high at 5.6. And that is why you discovered that yesterday the market rallied a little, for oil. And then this morning we are seeing that oil price is now sliding because that fear is still there. One is the expectation is if the inflation substantially moderates, Fed will not raise interest rate as much as expected at the beginning of the year, and that is good for investors, right? But with the core inflation still at 5.6, there is still concern that Fed may keep at least the 25 basis point that he did last time, right? And there is fear, inflationary concern. Because if inflation, recessionary concern, if inflation is still high, look at what happened to UK this morning. They just released their GDP number, stagnated 0%.
Yeah, they've been having a lot of strikes, so we shouldn't be surprised.
Of course, the public servant strikes and all of that. And so you see this sentiment is really affecting even the oil market itself.
All right, and can we expect that? I mean, for the month of March, the fuel queues reduced drastically.
Yeah.
The cash crunch was beginning to taper.
Yeah.
Can we expect that to feed into our inflation number and see a drop in our inflation number?
Exactly. That's what we're expecting for March. We're expecting that inflation could go down to 21.82. A little 0.06 deceleration. Basically, the strongest factor we've seen is that during at the peak of the cash crunch, farmers became innovative. All right, so I don't have cash. But I have this good for 20,000. If you can pay 15,000 cash, I can give it to you. Because some of those goods we are getting bad, eggs, chicken, a whole lot of stuff like that. So we saw most of those commodities moderating in prices in March. But that is over. Nigerian inflation is a legacy problem. Exchange rates, deficits, monetization, right? Supply, look at what happened in Benue, food basket of the nation. You're going to imagine what happened to that food supply chain from that agris and all of that. So in March, we expect inflation will moderate, but we're not having that same expectation for April, except things take a turn.
All right, so what else is happening in the commodity space?
Yeah, well, of course, as volatility remains in the oil market, we're also seeing gas still plunging further. But of course, we'll see $2 remain a kind of psychological line for the gas. And throughout this quarter, we'll expect that gas prices will remain low. Because one of the things we've seen in that ecosystem is that there's increased stockpiling in Europe, after what happened last year. But much more, in Europe, gas consumption, in terms of gas conservation, was about 20%. So there is this innovativeness in the use of gas. People are becoming more conservative in using gas. So that is depressing that demand for gas. And we're seeing the U.S. stepping up its gas production. Remember that last year, it increased, first quarter, it increased its gas export by 4%. And we're seeing the Texas Freeport that was closed last year is about to be opened this year, and
so we expect more drop in the price of gas.
Of course. So we're going to see. We're not expecting that the price of gas will push up that much. Well, for Nigeria, and
Nigeria, we're talking about gas stations now.
Yes.
So there should be more demand.
There should be more demand for gas, but the production.
All other things being equal.
Exactly. Because gas is seen as a better or a climate-friendlier alternative to a heavier fuel. But of course, don't forget that last year, our gas exports declined by 15%, and that's the worst in Africa. So I think the NLNG also still need to do so much more to take advantage of the gas ecosystem.
Yeah, Mr. Clem, that's why when the IMF said that Nigeria's economy is one of the most stable on the continent, a lot of questions are being asked. But anyway, we're going to have that conversation next.
Maybe
Thank you so much.
Next time.
Exactly. Thank you so much,
Thank
Economics and
you
Financial Derivatives, Mr. Clem Igbanugo, for your time this morning.
You're welcome.
Let's take a break now. When we come back, that conversation about Nigeria being described as one of the most stable economies on the continent, well, we'll delve into that after the break. Stay with us. Welcome back to Watching Business Morning here on Channels Television. The International Monetary Fund has described Nigeria's economy as one of the most stable on the continent. Well, this is contained in the World Economic Outlook for 2023. With the current macroeconomic realities, stability seems far-fetched on the minds of many Nigerians, as you heard on the last conversation that we just had. But let's have Mr. Ayodeji Ebo, the Managing Director of Optimus by AfriInvest, join us now. He joins us virtually from Abuja to help us dissect this. Good morning, Mr. Ebo. Good to have you.
Yeah, good morning, Nick. Thanks for having me.
Yeah, so, I mean, since we had this, that Nigeria is one of the most stable economies, a lot of Nigerians have been asking questions. I mean, we just talked about capital importation. We talked about the capital market, and we see them in the red, in the negative, especially when it comes to foreign investment or foreign investors. So how come Nigeria is one of the most stable economies on the continent? Better than Angola?
Okay, thanks. I think we need to look at the context from which IMF is looking at this from. What they are looking at is based on the figure, the GDP numbers, for instance, based on the projection, despite a lot of the volatility within the global economy, we still see that it was positive even at Q4. And when you look at it on the average for the year was at 3%, and based on their projection of 2.8 and 3% in 2024, it still looks stable. But when we look at what we have to also look at, there you can't say they are wrong because they are speaking to the data that they have based on the GDP. But for when we want to also now dissect that number, for us as a country, what is the optimal GDP level for us to be able to have improved standard of living and improved growth? We need that optimal level is still between 5 to 6%, where we would have more people move from that poverty level. Because this stable growth rate, even at 3%, compared to the population growth rate at almost the same percentage, will mean that more people will be going into poverty. And once you have more people going into poverty, it means that it would also impact on business activity, it will impact on insecurity. So I feel that that's the context for which they are also looking at. You see in that, in the report, they also try to advise around how the removal of subsidies, which if it's a full removal at once, which will also create some instability because you will see inflation quickly move ramp up, and that would impact on also cost of living, cost of things. So we don't just have to pick it from surface because they have just said Nigeria is one of the stable countries. You also want to look at the other countries. For most of those other countries, you spoke about Angola, at Egypt, most of the South Africa are looking at the those we can call the giants of Africa. When you look at the crisis, the oil crisis, the hike in rates really impacted them on the economy because they are more glued to the economy. For us in Nigeria, since 2020 crisis, we have not even recovered. A lot of the foreign portfolio investors have not even invested in our country. So we did feel that impact last year when a lot of foreign investors were pulling out from other African countries. So when you look at it holistically, you can say, despite the crisis that happened, which impacted a lot of other African countries, it did not impact us much because the way we are positioned, it's not expected to impact significantly on us. They are the foreign portfolio investors that create liquidity for FX for us. They are not doing much in the country. You spoke about our capital importation data, 50% year on year down. for FDIs. FDI is almost thinning out. So you would see that it's like either has already down, should fear no fall.
You know, Mr. Edijibo, I wanted to be excited, but the last statement you made kind of questions that excitement. If you say Hida is already down, first of all, that means that perhaps Nigeria is already down, so we're not fair. But I think one of the things that come out of what you have said is the relationship between the numbers and the reality. Because as you noted, IMF is saying what it says based on the numbers available to it. And a lot of people say, how true or how real are these numbers? Which is what we even discuss when we see our inflation numbers, when we see our GDP. How really is this translating to the welfare and the well-being of Nigerians? I guess that's another conversation that Nigerian economists and analysts, such as yourself, should be having.
Okay, thanks. So I think, first of all, we need to look at the methodology of arriving at this data. So when you look at the inflation data, for instance, it's a basket of over 200 different items. Food item constitute about 50% of the inflation basket. You have imported goods. So there are different goods and it's the average. So what we need to look at, there was a time that it was rebalanced. We need to look at what do we actually spend money on in Nigeria so that it actually captures and reflects when prices move significantly. Imported prices, when exchange rates devalued or was adjusted, especially at the parallel market, how much of impact did they have on the imported goods? Were they properly captured in the inflation rate? So before we can say it's not reflective of reality, you need to understand the methodology of arriving at these numbers. You would see that the inflation rate, when you look at it even for March, that for February rather, that there was a slight drop in the inflation rate. And you could trace it that it was like there was also a base effect, because when you look at the composition of some of these numbers, what happened in prior year also has a way of impacting on the actual numbers. And when you talk about a basket, it means all the items. Some of those items might have increased by 100%, some might have reduced by some percentage, and some might not have increased. So it's the overall, and based on the weight it has, that would reflect on the actual numbers. But when we speak in terms of the cost of living, standard of living, you see, looking at the impact of that, exchange rate has almost direct impact on the standard of living, because we import a lot of things. And even for those that don't import, because they still have to deal or buy things that are imported, or deal with things that has that importation element in quotes, they also have to allow the prices of their goods to reflect that change, so that they can afford it. So you hear that when people, the woman selling groundnut, say, how does it impact? How does the exchange rate impact on what she's selling? But if she does it, she's not able to earn an income that can sustain her, because maybe she has to rent a house, she has to buy a phone that is has FX elements, then she won't be able to continue selling that groundnut. So you would see that she would adjust her price to reflect what is actually happening around her, so that she can be able to at least increase her standard of living to a level. So there are different dimensions, and I agree with Nigerians that yes, when we look at reality, things are really very tough, and we're all just hopeful that as we expect a new government May, some of the things will be put in place to make life better and more bearable for Nigerians.
All right, thank you so much. I hope Nigerians accepted your explanation and perspective to that. Thank you so much, Mr. Ayodele, the Managing Director of Optimus by Afrinvest.
Always my pleasure. Thanks for having me.
Yeah, and we wish you a safe trip back to Lagos when you're done.
Yeah, thank you.
All right, so it's now time to head to the market now. And the market was either this way or that way, yesterday. So it stayed at 0.00%. It's not that we should celebrate it, but I mean, this is what it was. A lot of sell pressure still going on in the market. Equities cap has actually lost 29 trillion naira. It's now at 28.3 trillion naira. Let's look at the sectors to see those who brought us down to this level. We do know that for more than a week now, Transcorp has been doing very well, and there you see it again, top trades, that's what we have there, top trades. And Transcorp, I know you've heard the news of what happened with Mr. Femi Otedola about this. We'll discuss on that. The banking sector also did well yesterday, even though some was bent to sell pressure like UBA and FBN Holding, but we do know that Fidelity Bank and UBA, they topped. This was a lot of sell pressure, a lot of sell-off happened right there yesterday. But let's settle on Transcorp now to tell us. So that's a volume all in red, as you'd expect. That's been the sentiment for a bit now. But let's settle on Transcorp, because there was that news that Mr. Femi Otedola has bought more than 5%, about 5.5% of Transcorp. And and we've seen Transcorp in top trades for more than a week now. Is there a connection? Well, let's speak to Mr. Abdurrashid Momo, who trades and should have his ears very close to the ground on what has been happening. Mr. Momo, good morning. Thank you for your time this morning.
Good morning. Can you hear me?
Yes, I can hear you. So what has been happening? We've been seeing Transcorp on top trades for a while now, and now we hear this news. So, some of us are asking questions. Is this prearranged or what's going on?
Where do I start from? What we need to know at times is when you see volumes traded continuously in a particular stock, you know something is likely going to happen. But we didn't see this coming, this particular, we didn't see it coming. Until when I saw that large trade, that the 1.5 billion shares, I knew this was a major cross deal, but we didn't know whom the buyer was until we got the news last night that it was Mr. Femi Otedola that bought into the shares. And if you know one thing about Mr. Otedola in terms of its acquisition of shares lately, the one from First Bank, you saw that trend. There's always an upward, there's always a price war when he is into any of these companies. What he did in First Bank, the share price of First Bank went from about 5 naira to about, I think, 12 naira then. And now for Transcorp, as we speak now, Transcorp is on full bid. About 110 million units on bid. They've traded about 6 million so far, but there are no offers, and I see this trend continuing. It's a good thing. I think Transcorp is also into power. So I think I wouldn't know his reason why he is interested in Transcorp, or perhaps he just wants to diversify. His risk also, depending on what we're looking at. But so far, I think it's a good deal because Transcorp has been consistent. They've been on the downside for some years, but since they acquired the power holding, they've been doing well. And I think for him, he saw it as a good opportunity, and he keyed into it.
So if we want to look at what's happening with Geregu since he got on board there too, what should we expect? Would this be a good time for investors to still jump on, or is it too late?
It's not late. If you see, it's a long term. You can't go wrong in terms of power. You can't go wrong in terms of power. Power is what everybody needs. We can't do without power. It's like you cannot do without data. So power, it's something about it's what we need. No matter how it is. So I think for him, it's a good deal. I don't know if Transcorp might be able to, because we're talking about float. The number of shares Transcorp has is more than what Geregu has. We don't expect prices to hit 100 now. I don't think so. But I think historically, the highest price Transcorp, I think the highest price so far was about 9 naira 6 kobo. Those down in about 2007 and 8. That was the highest price Transcorp ever hit. So, and it will take time. We don't see Transcorp going. I see some resistance in terms of about, let's say, 2 naira plus, get it to about 2 naira. But I know this rally will not, latest Monday, Tuesday, it will fizzle out in terms of the uptrend, because what we are seeing more is now of a price war. Investors have gotten hold of this information, and they know how anytime $10 is into any stock, displays this price hike. So I think people should just enjoy the rally for now. For investors, it's a good buy. For the long term, and for traders, it's a good time. I mean, those that enter the bus early, I know latest Monday, Tuesday, they're going to dump. You understand?
All right, so briefly now, just before we let you go, how do you see the market closing today? We're undecided yesterday.
I think the truth is that I think this thing has actually triggered the market. I think the overall market in the beginning was all green, but the market remains mixed for now. You know, I did tell you then that the market still needs to correct to the downside, and I still hold on to that, that the market will still correct to the downside.
All right, Mr. Abdul-Rashid Momon, thank you so much. Even though we don't like the correction, but I guess it's a fact of life. Enjoy the
correction is important. We need it. It's good. It's good for the market.
It's good for the soul.
Good for the market.
Okay, all right.
You need to rest. The body needs to rest. Then it moves.
Okay. The ball needs to rest. All right, thank you so much, Mr. Abdul-Rashid Momon.
Thank you very much.
Bye. All right. Okay, so now let's look at some other numbers there. Go to another market. The unlisted market yesterday ended in the positive 0.14% at 739. Market cap still retaining the 1 billion naira level there. The volume, just 20 deals worth 70.58 million naira, volume 533. Let's see, there's the money market there. The treasury bills only had one deal. What a quiet market, although we hear the primary market is more active. One deal worth 1 billion naira. And then we see the federal government. Can we see the federal government? There you have it. 7 deals at the federal government bonds, 3.7. And let's see the central bank, I believe. That will be next. Central bank bills. Okay, all right. I think that's much we can take because Juliana is standing by. Thank you so much, Mr. Momo, for that market analysis. Let's head to London now. Juliana is standing by. And it's not a very good one from the UK because we saw their GDP yesterday, and it was undecided like Nigeria's equities market, unfortunately. Juliana, good morning. But, I mean, we can say that this is a result of all the strikes that we saw last month, which seems not to have ended. You know, we still see a lot of strikes coming up later on. But I mean, we shouldn't be surprised, I guess.
We shouldn't be surprised. Good morning. Any really disappointing figures out of the Office for National Statistics this morning, showing that the UK economy basically stagnated in February. In the 3 months to February, GDP, I believe it rose mildly by 0.1%. As a whole, month on month, I think there was 0% growth. And as you were right in pointing out, this is really about the industrial action that has taken Britain by storm. It's pretty much being downplayed by the media, but we've had significant disruption. In fact, I believe in the month of February, there was a combined industrial action wave of over 100,000 people. And now this was the civil servants, this included teachers, this included NHS workers, and it's all contributed to downward output. We know that services is a big contributor to the UK economy. It contributes
80%. That's massive. So if you have people not turning up to teach children, that means parents have to stay at home. And of course, as I've said countless times, if parents are at home, then they're not going into the office, they're not buying coffee, they're not going for drinks after work, they're not buying, throwaway clothes in retail stores. And that's exactly what the British economy needs at the moment. Now, as to be expected, we have heard from the Chancellor, Jeremy Hunt, who's kind of downplaying the data. He's talking about the growth because there was a percentage of a point growth in the 3 months to February. But is 0.1% enough? Yes, we may have come out of avoiding a technical recession at the end of last year. But some economists looking at these figures today are saying we are likely going to enter into a recession. And of course, this doubles down on the data and the forecast we got, I believe, on Tuesday from the International Monetary Fund, saying that, the UK economy is very much struggling behind the rest of comparative economies in the G7. So not great, particularly because we know this week, I believe we're on the 3rd day of a 4-day junior doctor strike. Over 300,000 hospital appointments have been cancelled this week alone. 300,000 appointments. And there is money contributing to that. So expect more declines as the months continue, Inni.
Yeah, not looking good at all. Another thing is the new rules in converting properties to holiday lets. Why do we even have new rules?
Yeah, this is really interesting, and it's still very much at the consultation stage. An announcement has been put out by Michael Gove, who's a senior Conservative minister. I believe he's the secretary for Levelling Up, and he's been looking at what second homes are doing to local communities. I think during the pandemic, so many Brits were obviously doing staycations, renting or Airbnb-ing really nice properties on the south coast and, in fact, all across the United Kingdom economy. And the problem is that now these have become incredibly popular. So if you are somebody who's lucky enough to own a second home, let's say in somewhere like Cornwall or Devon, which is in the southwest of the country, you'll be making a lot of money. But if you are a very normal person who's living in that community, then you're going to struggle to buy a decent priced home or an affordable home because so many people from outside of your community want to live there for a short-term let. So this is why the consultation is going through. It's going to definitely come across some tension. We've already heard from a senior minister who has constituents within some of these popular tourist destinations in the UK, and they said it's just anti-business. It's not great. Why would they have to apply for planning regulation just to lease out their home? But of course, when we are talking about levelling up, we are going to be approaching an election soon. I think the Conservative Party want to ensure that they are not just a party for the rich, that they are looking after local communities by making these regulations and rules be in place by that time.
All right, Juliana, thank you. But I mean, when you said very normal persons, I was like, Juliana, can we have a definition to that? But anyways, we'll talk to you at 1:30.
People like us, Inni. People like us.
Okay, I agree. All right, Juliana, we'll talk to you at 1:30 during Business Incorporated. All right, so thank God I'm a very normal person. Sounds good. I don't know if Laddie Williams is a very normal person.
Maybe a little.
Oh, just a little normal. A little abnormal.
I'm not gonna say
oh,
it.
My world. I'm sure you can continue that conversation with Juliana at 1:30.
Exactly. So
you ask her what category of person you are.
I'll let her define me in this market.
All right, Laddie.
Well, look at the fear grid index there, 61 points. We're losing that greed level, apparently, even though Bitcoin is still shining, at 30K at this point. Recession fears impacting most global markets, but we see Bitcoin, they're holding on $30,000, up 0.70%. A lot of volatility happening on this level there. We see a lot of the disparity there from 29 to 30K. That range has been quite tight at this point. Ethereum teasing that $2,000 level, 3.05% up, $1,921. It did touch 1,990, trying to get that 2K level, but we see the tease happening there. BNB up 0.21%. The Binance token and Cardano having a big jump this morning, 40 cents, 3.73% up. That's what we're seeing for Cardano. Let's bring in Solomon Amunde now, financial market analyst. Hello, Solomon. Good morning.
Good morning, Ladi. Good morning.
So, Solomon, like I said before, stocks down, global stocks. We're seeing the U.S. dollar also, down at this point. But it looks like Bitcoin still shining at 30K. Doesn't look like it's afraid of recession at this point.
Yeah, for now, it still looks like it isn't afraid, and that's majorly because of FOMO and also at the same time price action in place. So, but we should expect Bitcoin to start retracing from late this month into the month of May. We should expect Bitcoin to retrace to the range of about $24,000. So I don't see Bitcoin going above 32K currently. And for me, I feel we have peaked for this first quarter of the year. We've peaked actually at around $30,000. So the most we can see would be 31K. Afterwards, we should expect a huge correction.
Yeah, quite a peak there, almost 100% in the first quarter. But we know Ethereum is also in the news for the Shapella hard fork. That's gone live on the mainnet. And we see, Ethereum teasing investors at this point, not getting to that 2K level, but quite close. How's that impacting the network?
Yeah, so currently the Shapella upgrade has been something that most traders have actually been expecting for a while, and we're expecting this to affect the price of Ethereum negatively because we would see almost $34 billion worth of Ethereum unlocked within the next few hours, and most persons are predicting that we would have lots of Ethereum on exchanges, people that will be willing to sell, and that would be pretty bad, but we are waiting to see how they'll be able to mitigate having too much Ethereum in exchanges.
But do you see 2,000 hitting for Ethereum and maybe staying above that for a little while?
Yeah, definitely. Once Bitcoin dominance starts correcting, which it has already started as at yesterday evening, once it corrects to about 44%, we should see Ethereum making about $2,000, $2,100. Same this month, actually. But next month, I expect Ethereum to also dump down to at least $1,400.
And definitely all eyes on Bitcoin and Ethereum at this time, but I'm sure there's some altcoins that might be undervalued, at this time. What are you looking at in your portfolio?
Okay, so currently we have EOS, their EVM is actually launching tomorrow, and it's actually extremely undervalued. This seed hasn't really moved. In fact, for the last 24 months, it hasn't really moved. So we're expecting EOS to make a move between today and maybe the weekend. So on my radar, I'm looking at EOS. I'm also looking at Zilla because they're also expecting EVM on the 25th of this month. So those are the two projects in my radar, actually, EOS and Zilla.
EOS and Zilla. All right, we'll keep watching those ones. Thank you so much, Solomon Amunde, financial market analyst. So if we look at the top.
Thank you, Ladi.
Thank you. So top gainers now, see Woo network there, 24 cents, deep liquidity network there, up 12.01% this morning. Near protocol also up 9.39%. We see Phantom DAG protocol there, 51 cents, trying to start another bullish run. It did profit taking did pull this back, recently about 40 cents, but now it's trading at 51 cents, up 6.46%. IMX $1.13, up 6.14%. Let's look at what's happening with the top losers. See STX Flare token leading that counter, down 6.33%. So, Bitcoin still shining, regardless of recession.
Yeah, but I mean, your conversation that just drew attention to Ethereum. I think some people might have to look at Ethereum.
Yeah. So
give it a second thought, because if we're expecting correction on Bitcoin, that means the alt and
the alt would definitely be affected. But who knows? Some are just having fun all the way to 31K, but doesn't seem so far away. It
doesn't seem so. I mean, all right, Ladi, thank you so much.
Thank you.
1:30, we'll see you. Business Incorporated. All right, so that's it on the program today. Thank you so much for being a part of it. Do remember to join Ladi Williams 1:30 for Business Incorporated. And then I'll see you tomorrow. Meanwhile, make the most of the rest of the day and enjoy yourself. I'm John. Bye-bye.